E-mini playbook, 7-minute recap, May 19, 2023. Getting into today's activity and how it relates to the principles that we go over. And we start where we always start, which is on the daily chart. And we see that there are good things to talk about. Number one, this congestion that was established since April 17th is potentially being broken. So that pulls us into the market mood that is known as congestion exit. And upon congestion exit, there are two directions that we can go in. We can go into a reversal of this trend, which we were in, or we can go into a trend continuation. And what it looks like we're going into after this period of congestion is a trend continuation. How does it look? Trend dots going up here. We go into this period of congestion. Then we go into this continuation. So the reason why this has such a big impact is because this zone here is a zone that was established and it was attempted by the market to break, and it was unsuccessful a number of times. So the fact that we're breaking out of this congestion going into trend continuation gives us an indication that this zone could potentially be broken, which sets up the market for a potential to go into a higher level. A key word for today is the idea of probability. Why are we concerned with probability? In trading, it is that in trading there are no guarantees. It is a skill that is based on the probability and which direction does the market have the highest probability to go in. And being a master of probabilities is the game of trading. So as we break out of this period of congestion here, the probability is that we are going to continue in this direction. So yesterday's bar is the breakout. Today's bar gives us an idea of whether or not we're going to continue in that direction. So looking at the advanced decline line, what we want to do really quickly is make a comparison, and this is a good way to observe the advanced decline line day by day to get an idea of the patterns that it makes. So let's start with today's advanced decline line. We see it trending downward since the opening of the market, 9:30 going into 11:30. We see it going downward. We see it starting at 1,000 and then going past zero and then going below zero. That is today. But let's compare that with yesterday's advanced decline line, which we have here, which was the opposite. And it's a good example of comparing what the advanced decline line is doing versus what the market is doing. Yesterday, we opened up at a low level and we trickled downward and we saw the downward move. And then around 10 to 11, we saw the reversal. So we see the advanced decline line giving us an indication of what the actual market is doing. So as we open, and then we immediately begin to trickle down. So as that's happening, what's happening on the NYSE tick? NYSE tick is also opening high and trickling lower. Zero line is here. We see from 9:30 to 11:30, the trend is that the ticks are moving consistently under zero. What does all of that imply for the market? That's a very good question. So looking at the 2-minute chart, how does the activity on the advanced decline line stack up with what's happening on the 2-minute chart? As we open the market at 9:30 here, we see as the advanced decline line was trickling downward, we see a downward move on the price activity from 9:30 all the way until 11:30. So we have consistency there. Good part for us is that the advanced decline line tends to move ahead of price. So that gives us an idea of the type of trades that we're looking at for the morning session, which is basically short trades. We don't want to take anything long when the advanced decline line is in a downward move. Also, the probabilities based on the trends that we are outlining is that the market is in a bearish market. Market is in control to the downside, so we are looking to go downwards. We have activity that is consistent across the board, and so we are taking advantage of that to ride in that move. As the advanced decline line begins to move sideways, we see that the market moves sideways. And again, last Friday, we spoke about the habits of the market. The market has moods, the market has characteristics, and the market has habits. One of the habits of the S&P is that the Friday activity after, say, 11 o'clock, it is either going to make a statement or it's going to trickle out into congestion and move sideways. And today we saw the latter. The market basically made its move in the morning downward, and then we drifted sideways. So a slam dunk statement would have been a drastic continuation of this upward move that was established yesterday, which was Thursday. We did not get that. We kind of got a muted move, and there was no follow through or continuation, and everything was in line to move sideways. So the question from there becomes, for the next week, will we begin to go into this trend continuation and continue upwards, or will this zone, which has been in place for some time, will it actually hold? So that's the question that we're looking to answer on Monday. So there you have your preparation for Monday. These are the types of things that we look for, so that when the market opens on Monday, we are looking for one of two things. We're looking for a fizzle, which means that this zone is actually holding, or we're looking for a drastic move up, which means that this zone is going to indeed be broken, and we're going to continue up to the downside and move into what we call market continuation. So those are the benefits of going over the plays of the day in preparation for the next day. So that is it. Hope everyone had good trading. We look forward to building up a community and going over the principles that we discussed in the book. 7-minute recaps are a quick synopsis of what happened during the market. We go into more details of what is actually occurring and what we're looking at on the playbook in our e-mini book. So have a good evening.